I'm here with Tom Reed. He's our VP for China. Good to see you, Tom.
Very nice to be here, James.
Tell us about China. China is back, or is it? Like, that's the message from Beijing, but what's the impact on global demand of a resurgent China?
I think China is back, and that's certainly the message that the government's very keen to send, because essentially they lost an entire year of economic activity. Growth slowed to just 3%. It was one of the slowest in recent memory. Oil demand collapsed, and with it, economic activity. So they're very keen to get growth back on track, and as a result, I think we are likely to see far stronger oil demand this year.
What does a bullish China mean for the rest of the world?
Well, I mean, we're projecting oil demand growth this year from China of up to 1 million barrels a day, which is pretty punchy. This would take growth back to above 2021 levels, bearing in mind that it shrank last year. And that would probably account for around 40% of global oil demand growth over the, for the 2023 projected period. So it would be pretty bullish, especially as we're coming into with a period of quite low stocks. Crude stocks globally still quite low.
That's true, but China, well, Asia in general, is taking some Russian crude. How much of that do you see going to China, and what is the effect of the G7 price cap on Chinese buying of Russian crude?
Well, Russia has become one of China's two main baseload sources of supply, essentially. It takes around 1.6 million barrels a day from Russia last year, and I think that is going to go up. I mean, it can't take any more Espo blend, but I think it's highly likely that it'll take more Urals, more Sokol, more Sakhalin blend, these kind of grades which haven't tended to go to China, and maybe it'll take a little bit of the Indian market share. It'll take some of the Russian supply away from India towards China, because essentially China has now become a hermetically sealed market. So the crude is being delivered on Russian ships or ships owned by companies in the UAE. It's insured out of Russia or out of China, and while it trades in dollars per barrel, these deals are settled in RMB, so they're essentially outside the purview of the price cap.
Thanks very much, Tom.